Well, good morning, Jagindar Rana here. And the topic of the day is insurance must regain consumer trust. Insurance must regain consumer trust. In recent years, the Indian insurance leaders have faced a tough task when talking about industry growth, drivers, and consumer trust. For some, it has turned into a little more than lip service, detached from the consumer's real challenges and insurance potential. While the industry speaks of lofty goals, the hard truth is that Indian insurance remains far from realizing its potential. Despite regulatory ideas to increase penetration, from opening up 100% for indirect investment to reducing capital requirements for new insurers, the industry has seemingly lost sight of a core need, consumer trust. So insurance penetration in India stood at just 4.2%. The Indian insurance sector is also heavily skewed towards life insurance, which accounts for 76% of total premiums, compared to a global average of 43.7%, with non-life insurance forming 56.3% of the market. So the consumer trust is foundational to insurance sector. Yet recent surveys suggested that many Indians would not even recommend their insurers to a friend. This lack of advocacy reflects an industry that appears self-serving, with talent often shifting between companies but rarely moving towards customer-centered reform. The primary focus has instead been on metrics and the same pool of industry insiders. True security in insurance lies not in policies or profits alone, but in the trust earned by placing consumers at the heart of every decision. Looking back, certain lobbies sought to keep FDI capped at 49%, benefiting from fixed internet rate of return, deals that many foreign partners had signed to access India. These arrangements effectively meant foreign brands renting local support to gain legitimacy. When the FDI range restrictions changed, many hoped for improvements in products and services. But ownership alone doesn't address the underlying issues. What the sector truly needs is patience, capital committed to at least 10 to 12 years of strategic investment. So instead, there is a focus on rapidly building a profitable book and diluting stakes for higher valuations. This behavior, enabled by a lenient regulatory stance, prioritizes short-term gains over consumers' interest in product quality. While regulatory shifts have been taking place, they have often felt incremental, lacking the boldness to elevate the sector to a level comparable even to India's other financial regulators. Changes have come, but they feel held back by a culture of hesitancy. Why? The answer may lie in a reluctance to engage in deeper reforms that prioritize consumer welfare over industry growth metrics. But the answer would further be found in the rigor of regulatory supervision over the industry. For example, claim processes in Indian insurance is another pain point. While fraud prevention is essential, the current approach burdens honest consumers with an adversarial system where each claim feels like a battle. So the overarching ideology seems to assume guilt, require consumers to prove themselves at every step. This might be rooted in real fraud concerns. But such a blanket approach creates a deeply hostile environment for policyholders. In general, insurance claims as well as policyholders often expresses concerns about settlement times and the final amount, No amount of digital innovation or streamlined processing will fix this if the underlying attitude remains distrustful. Insurance is unique as a sector where consumers rely on absolute trust. So, given that the benefits of policies are often realized only in difficult times after a loss of life, health, or property, unfortunately, a gap seems to exist in meeting this essential expectation. So despite the industry's attempt to dazzle with buzzwords like consumer engagement, distribution reach, and digital access, these efforts ring hollow. Financial regulators like the Reserve Bank of India and the Securities and Exchange Board of India and the Insurance Regulatory and Development Authority of India should work together to curb malpractices like mis-selling of financial products across industry segments. Without regulatory accountability, the consumer is left vulnerable with little recourse and a legal and grievance redress system known for inefficiency and delay. Take health insurance, a prime example of the sector's brokenness. It seems an open stakeholder conversation that hospital bills are often inflated, purportedly hand in glove with the sector, with insurers only partially covering costs, claiming fraud concerns. Yet the lack of regulatory actions on this speaks volumes. A simple yet radical change would be mandate full settlement within a stipulated period, forcing insurers to pay out fully and promptly unless they can prove otherwise. So this would shift the burden from consumer to insurer, creating a system where the regulatory position is to honor rather than deny claim. Regrettably, the insurance industry's influence is akin to regulatory capture, often muting any true accountability, while other financial sectors have seen regulatory actions against malpractices. Insurance appears insulated from such scrutiny. This calls for stricter supervision and a tougher regulatory stance. So the regulatory vision of insurance for all by 2047 to match the political aspirations of Viksit Bharat is well intentioned, yet setting a distance goal without clear annual milestone is more tactic than true strategy, with most industry leaders and regulators unlikely to hold their positions by them. This approach lacks immediate accountability. So the insurance sector needs an overall, not just superficial challenge. Indian insurance needs genuine introspection and a shift in behavior where consumer welfare becomes the core purpose of its existence. The regulator must reinvent itself to adopt a consumer first and digital first approach to cut through the sector's hooveries and bring accountability. Without reform, the industry risks remaining in its own echo chamber, ignoring the very consumers it claims to serve. Only by stepping out of this cycle can Indian insurance achieve the credibility and relevance it so desperately needs. Indian insurance sector recorded a gross written premium in excess of $130 billion with a 11% CAGR growth during 20 to 23, outpacing Thailand, China, which grew at less than 5%. So, steering India insurance from growth to value in the upcoming decade, while the life insurance industry grew 11% per annum to $107 billion as of 23, the general insurance industry grew 15% per annum to $35.2 billion. So the robust performance among other regions has allowed Indian life insurers to maintain valuation multiples and price to book of 7 to 10 times compared with just 1 to 2 times for regional peers in Asia. Though despite a strong premium growth, India's insurance penetration rate slipped from 4.2% in 22 to 4% in 23, indicating that the progress has not kept pace with the country's economic growth. So while achieving over 17% CAGR in new business premiums, India's top five private life insurers have reported a less than 2% CAGR in net profits over the past 5 years. So, this is attributed to challenges in cost management and operational efficiency due to escalating expenses, including higher commissions, operational costs, employee-related expenditure, and marketing expenses. The government could potentially save about $10 billion annually by expanding insurance penetration to encompass underserved population and events. A comprehensive life insurance coverage could assist the government in alleviating the burden of providing ex gratia benefits to families affected by the loss of life or livelihood due to accidents or unforeseen events. A targeted interventions program for crop insurance could contribute to minimizing crop losses, reducing loan defaults, and improving yield. Despite a decline in claim ratio, a steady increase in expense ratios among traditional players until 2023 pushed the combined ratio upwards. Improvements in leading productivity metrics such as operating expenses per life or policy has been negligible over the past 2 to 3 years for both life and general insurance companies. So that way the growth is better, but still the industry needs total revamp. Thank you. Thank you very much.